Gold prices are pulling back a little bit today, pulling off their highs, having previously broken through the resistance around 1750. The yellow metal had consolidated for around a month prior to that breakout, and it seemed that that breakout was going to lead to a surge in activity, potentially pushing gold back towards the $1,800 marker. But we have run into resistance relatively quickly. The move today is being aided by the rebound that we are seeing in the dollar. Those two are inversely correlated. A stronger dollar makes gold ultimately more expensive for non-dollar denominated countries. So when we do see the dollar rise, we typically see that weigh on gold a little bit. But the momentum had shifted prior to the bounce that we did see in the US dollar, which does call into question just how sustainable the rally in gold is going to be and how much bullish appetite there truly is. So that's going to be tested, I think, now over the coming days. Should gold continue, though, that move higher? And we did see a decent move off of 1700 towards those levels. So it was quite a rally. So we may just be seeing some profit taking. Should we see it rotate higher once again, break through those previous highs, the real test here comes around $1,800. $1,800 back when we were trading at these levels all those years ago was a major level of support and resistance. And that will be a massive test as far as the yellow metal is concerned. Now, there are a number of factors potentially weighing into the moves that we're seeing in gold right now. And I think there's a few of them which are certainly worth noting. The most obvious one, of course, is the US dollar. Gold is also typically a safe haven, but we haven't seen too much evidence of that. It appeared last week that we were starting to see that re-emerge. But again, as ever, that relationship over the last few months has been not particularly reliable. And I think we seem to see a lot more evidence of that at play before that starts to really shine through. And stock markets, as we know, are starting to level off. We have some momentum slip out of that rally as well. So we'll should see over the coming weeks whether that relationship, the safe haven relationship, has been reestablished or not. The other thing that's getting a lot of attention right now is centered around inflation. Now, gold is typically viewed as an inflation hedge. It's one of the appeals of gold, particularly during times of inflation, during times of QE, as we saw over the course of the last decade. Now, we are going through an interesting time right now, and it seems that two separate dynamics over two different time spans are being factored into the markets, which may be having an impact on gold's trading. Last week, there was a lot of talk about the potential for inflation down the road. This stems from the belief that we are going to see deglobalisation to an extent over the next few years as economies diversify or undo the diversification process from their supply chains in order to protect itself against another wave of coronavirus, but also the growing trade tensions that we've seen, particularly between the US and China, and that would prove to be inflationary. Part of the low inflation has been stemmed from these growing supply chains around the world. The other factor, though, is the near term, and that is a focus on deflation because of the severity of the economic slowdown which we have seen. So these two things going against each other will prove to be interesting as far as gold is concerned. And it seems to be that what is in the headlines more at that time is having an impact on the price of gold. So I think that's going to be another thing to watch. The final thing, of course, is the trade war. We've seen the tensions rising again between the US and China. Donald Trump's Twitter feed is very China-centric. Again, it is an election year in the US, and given that the US death count is now approaching 100,000, there is going to be a lot of attempts made by the Trump administration to deflect any blame whatsoever towards China and almost shield itself as much as possible going into an election campaign when the economy is going to be in a very difficult position. So I think that could potentially have an impact. The more tensions we see, the more that could support the dollar as it has done in the past, and that could potentially therefore weigh on gold. So that's going to be another interesting trend that's going to be in place as far as gold is concerned. So while we are seeing a little bit of weakness near term, I still think the long-term prospects for gold are still very bullish. It's just a matter of time. And as we've seen in these quite extraordinary times, this can lead to a lot of volatility in the markets and also weigh on gold's safe haven appeal.